Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 741A, and today's date is August 14th, 2015, and the title of this episode is Americans Are Feeling the Economic Collapse as More People Turn to Food Banks. Let's get right into the economic collapse financial news. Now, we see out in Greece that the Greek parliament has approved the third bailout, and it seems that Tsipras is basically facing a rebellion of his own party. It looks like he's going to have major problems, and we might see snap elections. That might occur, because if you really look at this deal that they're agreeing upon, this does not help the people whatsoever. I mean, when we look at it, this is what some of the deal is made up of. That they're going to basically tax diesel fuel for farmers, and it's going to go from 66 euros per 1,000 liters to 200 euros per 1,000 liters from October 1st, 2015, and to 330 euros by October 1st, 2016. Farmers' income tax to be paid in advance will rise from 27.5% to 55%. Income tax for farmers is set to rise from 13 to 20% for 2016 and to 26% for 2017. Freelancers will be subject to a gradual increase from 55 to 75% in advance tax payments for income earned in 2015, increasing to 100% in 2016. The 2% tax break for single payments on income tax is also being abolished from January 1st to 2015. Private education, previously untaxed, will be taxed at 23%, including the tutoring schools that most Greeks send their children to, but excluding preschools. Reduced value-added tax rates for islands are to be abolished completely by the end of 2016, with enforcement staggered across three groups of islands from October 1st, 2015 to January 2017. And we see these taxes are definitely going to hurt business. They're going to hurt the people. This is not a solution that is going to spur economic growth in this country whatsoever. And we have always seen this, where the people get the brunt of basically what happens in government with the central bankers. The people end up paying, and this is what we're seeing right now. The people will end up paying. And guess what? More austerity will be placed on the people, and we'll see higher unemployment. We'll see more businesses closing. Because this is what we've seen in the past. Nothing has changed whatsoever. Because as we know, this money does not trickle down to the people. It goes right to the creditors. And we know that the Eurozone is completely falling apart. I mean, the economic growth in the Eurozone is down 0.3% in March through June. And they were expecting it was going to be a lot better, but it wasn't. Now, who's leading the way in all of this? It's France and Italy. And it looks like France basically is completely falling apart. I know they continually say that they're in a recovery, things are getting better, unemployment is going down, but here we are once again, where things are starting to fall apart. I mean, we see France and we see Italy, which is the third largest economy. They saw a growth dip to 0.2% from 0.3%. Together, the two economies account for around 40% of the annual Eurozone GDP. So their fortunes are key to the wider region right now. And we see that this whole thing is basically having a domino effect, and it's now starting to spread to all of these countries. But you know what? People in Europe, in China, Russia, they all realize that this system is not looking good. They're feeling it right now. And they want to protect themselves. And basically what's happening right now is in Europe, people are buying gold. I mean, Russia is buying gold. China is buying gold. And they're continually stockpiling their precious metals. European investors snapped up gold bars and coins at a rapid pace in the second quarter as they've looked at the turmoil in Greece. And they were threatening to basically leave the Eurozone, and they got very nervous. The World Council said demand in Europe for the precious metal rose sharply in the 3 months to June, compared to the same quarter of last year. The increase in Europe was led by Germany, where sales of bars and coins rose 24% to 24.1 tons in the second quarter. People right now, what they're doing is they're looking to protect their wealth. And this is coming from Mr. Hewitt from the World Gold Council. Wealth is eroded in many ways. It could be through high inflation, currency weakness. It could be that people want to hedge their risk. Gold plays a really strong role in this. But here in the United States, they're trying to keep us convinced that gold and silver, they're not worth having. Hold on to your paper, because paper and ink, that's worth something. Gold and silver, not worth anything. Well, you know what? Gold, you have to look at it as a wealth preserver. Things go down, they fall apart. This will help protect you. Paper and ink will not. And here in the United States, we know things are getting worse and worse as each day passes. People in the United States realize it. They just can't put their finger on it. A lot of people going to the new media, alternative media, whatever you want to call them, and they're starting to hear things that counter what the corporate media is saying, what the U.S. government is saying, what the Fed is saying, and they're scratching their heads saying, yeah, that makes sense. So right now, the U.S. consumer, they are losing faith. August preliminary UMich consumer sentiment slipped from July's 93.1 and missed expectations. This is the second weakest print since November. We see business expectations are now at 11-month lows. So businesses, consumers, they're looking at this and they're saying, yeah, something is wrong. Something is going on in the economy. And of course, if they continually listen to the corporate media, to the Fed, to the U.S. government, they're just continually telling them that, no, don't worry about that. We're in a recovery. Now, we know that those people who are losing their jobs in major corporations, they're going to apply for unemployment. But what's very interesting is that the initial jobless claims basically continually go lower. Now we're seeing major layoffs. It's not by 5 people here, 10 people there. We're seeing thousands of people. But right now, we're at 42-year lows in the 4th week average of initial jobless claims. But when you look at this and you see what's happening, we see that we are headed towards another crash. I'll give you an example. Back in 2007 to 2009, we saw the initial jobless claims rise dramatically. And of course, that was the Great Recession. Previous to that, going from the year 2001 all the way up to 2007, initial jobless claims continually fell. They fell to their lowest level during this time, and then we hit 2008, and things completely fell apart. And we know back in 2001, that was a recession. So we can see at this point in time, we are following the same path. Now, if we go back further in time, and we go to the year 1991 to about 1999, we see the same thing occur. The initial jobless claims came right down to the point that we're at right now. And then all of a sudden in 2001, we were in a recession. So we're following the same exact path. And we're at that point in the initial jobless claims where this doesn't even make sense anymore. And we can see that this is going to lead into the complete collapse of the system. And layoffs are continuing. Lenovo is going to be cutting 3,200 jobs because of sales that are completely down and profits that are tumbled. Motorola is going to be laying off 500 people. Extreme Networks, 20% of their workforce. Tyson Foods, 400 people. Union Pacific, 100 jobs. I mean, this is continually happening every single day. And it's not improving. Now, industrial production rose and everyone's clapping their hands. Wow, this is fantastic. But when we look back in time, we see that they basically revised all the numbers once again. Industrial production in July rose about 0.6%. They thought it was only going to rise 0.3%. How did they do this? Well, they revised everything negative going backwards. So the rise today would look much better. And we saw a huge surge in auto inventory to sales. And this made everything look a lot better. And we're having a major problem in the auto industry right now. Basically what they did was they continually produced cars. A massive production surge. And they basically stuffed the dealerships with cars. They're at the record highs right now. And this right now has been rising for about 61 straight months. And at this point in time, there's not enough people to purchase these cars. And the sales are not keeping up with the inventories. Things are starting to break apart. Things are starting to fall. They can't find the subprime people anymore. They're tapped out. They're doing whatever they possibly can. And every time they try to do something which will bring in more people, it's fewer and fewer people who are coming in and purchasing the cars. So what happens next? Well, we're going to see a production slump. We're going to see the auto industry completely crash because we know this is a bubble. That's all this is. This is a bubble, just like the stock market, just like the student loan debt, just like the treasury bond market. It's all the same. Now, we understand that retail sales are completely falling apart. Now, at this point in time, they came out with their new statistics about retail sales, and it was right in line with what they expected, a 0.6% rise. Now, of course, this was all helped by the auto industry. They manufactured, they pushed the cars out there, they got the subprime people in there, and they pushed this very hard to get the 0.6% rise. But you have to remember, retail sales have been falling all along. This little bump is not going to do anything. And we are seeing red warning flashing lights everywhere, because when we look at it, what drove a lot of this is the auto industry and food and beverage. I mean, if we look at other things like electronic and appliance stores, down negative 1.2%. I mean, terrible. If we look at general merchandise stores, department stores, negative 0.8%. So what we're seeing right now, we're seeing them push the agenda, trying to keep the story alive that we're in a recovery, but we're really not. And as this economic collapse moves forward and it brings in more people, because as these people lose their job, they realize what's going on, they can't find a job, they have to get a part-time job. What we're seeing is that more Americans now are going to the food banks, applying for food stamps. 46 million Americans are now going to food banks. And the lines are getting longer and longer. This year, it is projected that food banks in the United States will give away an all-time record of 4 billion pounds of food. Over the past decade, that number has more than doubled, and the number would even be higher if food banks had more to give away. The demand has become so crushing that some food banks have actually reduced the amount of food that they're giving to each family. This is how bad it is. So what we're seeing right now is that people are standing on these lines to feed their families, just like we saw back in 1929. A lot of it is hidden because a lot of people are getting food stamps. And those people who can't feed their families just on food stamps, they end up going to the food banks. And the demand is getting so great that pretty soon this whole type of system is not going to be able to keep up. And this is what we're seeing at this point. Now, in the housing industry, we're seeing the mortgage rates tick up. And if these mortgage rates do go up much higher, mortgage applications are going to completely implode on themselves. I mean, this is what's been happening all along, and they're trying to keep those interest rates as low as possible. But according to the Mortgage Bankers Association Builder Application Survey for July 2015, U.S. mortgage applications for new homes decreased by 4%. And we're starting to see this in the housing industry where people are saying, okay, this is out of my league right now. I can't purchase a house. And they're not taking out the mortgages. And this will continually occur as time goes on. The whole system is falling apart. It's not getting better. It's getting worse. As we continually report on this, the collapse is actually here. We just haven't had the government to say, yes, we're in trouble. And of course, everyone's looking at the stock market because that's the last indicator. And when we look at our exports here in the country, we see that exports have fallen off the chart. U.S. containerized exports are imploding on themselves. Now, of course, they're saying it's the dollar, which is surging higher, but we're seeing other anomalies in the market. And we're starting to see those people that we export to, they're having troubles and they're not purchasing. So basically what we're seeing is this whole system starting to fall apart. Global trade had essentially come to a halt during the financial crisis back in 2008. By 2010, container export activity began to surge from very low levels and became part of the V-shaped recovery. It peaked in 2011. And now, what are we seeing? It's all starting to get worse once again. It's completely dropping now in 2015. It has pretty much dropped to the lowest point, almost back to where we were back when we had the crash of 2008. So this system is completely falling apart all over the place. Now this economy, I mean, when we look all around here, we're seeing indicators all over the place. And there are a lot of signs to let us know that things are completely falling apart. I mean, when we look at this, we see that General Electric, JP Morgan, Microsoft, IBM, Citigroup, Johnson & Johnson, Coke, Oracle, Honeywell, Goldman Sachs, and many, many, many others have all reported a decline in year-over-year sales for the second quarter of 2015. These companies are not unusual in this regard. Across the board, S&P 500 companies have posted a 4% drop in revenues. This marks the second quarter of year-over-year declines in revenue, something that has not occurred since 2009. Think about this for a second of what's happening. The profit growth for the S&P 500 companies is basically at its weakest point since 2009. That's because, in fact, there hasn't been any profit growth. S&P 500 earnings for the first half of this year, they're going to show a 0.7% contraction compared to a year ago. Guess when the last time that happened? You got it, 2009. The similarities right now compared to what happened in 2008 are showing up all over the place. Because what we're seeing right now, that this whole entire economy from 2008 to this point has not been a people economy. They have not been driving this economy. The central bank has been driving the economy with their easy money policy, with creating all of these bubbles. And as we know, bubbles pop. And this is what we're seeing at this point. I mean, Doug Casey is out there, and he's saying we are now exiting the eye of the hurricane and rapidly heading towards the Greater Depression. Jeff Berwick is out there. A collapse is being planned for September, moving the world closer to a one-world government. This is accelerating right now. And we all need to be prepared in so many different ways. And I know I continually say this over and over and over, but everyone needs to understand what is coming. You thought 2008 was bad. You thought 2009 was bad. This collapse is going to be completely different. How? It's going to be 1,000 times worse. Because you have to remember, nothing is better at this point. They haven't fixed anything. All they did was create more debt, $9 trillion worth. The Fed has just created more money. And basically there are more and more people unemployed now than there was before. Nobody has equity in their houses. And there are still people underwater in their homes. Retail has contracted. Stores are closing. Profits are not being made by companies. There are layoffs happening right now, which occurred just like right before the crash happened in 2008. I mean, everything seems to be happening in the same way. But we understand that other countries, they're taking precautions. They're doing whatever they have to do. And those countries who are not going along with the private Western central bank system, they're sanctioned, they're demonized. I mean, Russia is that country. And what they're doing right now is they are basically extending the food embargo to 5 countries: Albania, Montenegro, Iceland, Liechtenstein, and Ukraine. I mean, already they're banning food from EU countries, Australia, Canada, Norway, US. And we can see at this point in time, we're having an economic war right now. China is devaluing their currency. And basically they're trying to push their exports. They've started a currency war. And this move spells trouble for the U.S. The U.S. imports more goods from China than any other country. Through June of this year, the U.S. had imported $226.7 billion in goods from China versus $150.4 billion from Canada and $145.1 billion from Mexico. And this is according to the U.S. Census Bureau. The Federal Reserve has been struggling to avoid importing deflation into the U.S. This devaluation move now means that Chinese goods flowing into the U.S. just got cheaper, and the ability of the U.S. exporters to compete in global markets just got a lot harder. So we can see what's happening right now. This system that we're living in has been falling apart. I mean, there's no question about it. And we understand as we go forward, it's going to deteriorate, it's going to accelerate, and we will be in an economic collapse. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.